Hollis with Owner Hacks. Guys, most homeowners think their home insurance number should match what the home is worth. And that makes sense on the surface, but it's wrong. Market value and replacement cost are two totally different numbers. And if you mix them up, you can either panic for no reason or worse, think you're protected when you're not. So in this video, I'm going to explain the difference in plain English, what market value means, what replacement cost means, and what you should actually check for on your homeowner's insurance policy. Now, market value is what your home would likely sell for in the open market. It's driven by things like location, school zones, lot size, condition, layout, updates, buyer demand, interest rates, and recent comparable sales. As an appraisal, when I'm thinking about market value, I'm looking at what similar homes are selling for, what they're actually selling for, not what the owner spent, not what they owe, not what Zillow says on a random Tuesday. The market decides value. And the market includes more than just the house itself. It includes the land, the neighborhood, supply and demand, and what buyers are willing to pay right now. Now, the second part is replacement cost, which is different. It's about what it would cost to rebuild the structure if it were damaged or destroyed. That's not a sales price, that's a construction number. Includes things like materials, labor, roofing, framing, electrical, plumbing, HVAC, permits, code upgrades, debris removal, contract overhead, today's rebuilding costs. But notice what's missing from that list: the land. Insurance usually isn't trying to insure the dirt under your house. The land is still there after a fire, a hurricane, or a major claim, typically, unless you're on the beach with massive erosion. So if your home could sell for $600,000, but your coverage A dwelling limit is $420,000, that doesn't automatically mean your policy is wrong. It might be perfectly reasonable, or it might be too low. The point is, you can't know just by comparing it to market value. So here's where homeowners get tripped up. In some areas, market value is way higher than replacement costs because the land and location are valuable. Think waterfront, beach towns, great school zones, tight neighborhoods where buyers really want it to be. In other cases, replacement costs can be higher than market value. That can happen with older homes, rural areas, slower markets, or homes where construction costs have jumped faster than sales prices. Rebuilding one house after a loss is not always cheap. You're not building 200 homes in a subdivision with bulk pricing. You may be dealing with demolition, debris removal, etc., etc. That's why the replacement cost number deserves attention. Not panic, attention. So what should you check on your policy? Pull your homeowner's insurance declaration page, look for coverage A. That's usually the dwelling coverage amount. Then ask yourself 3 questions. Number 1, is this number based on a current replacement cost? Or is it just an old number that renews every year? Number 2, does the policy include extended replacement costs, inflation protection, ordinance or law coverage, or other endorsements that affect rebuilding after a major loss? And number 3, if construction costs jump tomorrow, would this coverage still make sense? And if you're not sure, call your insurance agent and ask directly, how is my dwelling coverage calculated? And is it enough to rebuild my home today? That one question is worth asking before you need it, because after a claim, it's too late to find out the number was stale. So the first mistake is assuming your insurance should match your appraisal or Zillow estimate. It usually should not. The second mistake is assuming a lower coverage A number means you're being cheated. Maybe, maybe not. You need the rebuild calculation. And the third mistake is ignoring the number completely. That's the dangerous one. Insurance one is one of those things that people don't want to look at until something goes wrong, but by then the policy's already written. You want to understand it before storm season, before a fire, before a major claim. So bottom line, market value is what buyers would pay for your property. Replacement cost is what may cost to rebuild the structure. They're related to the same house, but they're not measuring the same thing. If you're a homeowner, check your coverage A on your policy, ask how it was calculated, make sure it reflects today's building cost. And for more practical homeowner tips, go to ownerhacks.com.